Hi, this is Tom Soane, just on my way for a Saturday morning game of golf. Cannot wait. Golf course is back open, finally. But you know what? I saw a question this morning from Ben, and Ben's problem was actually a family member's problem. So Ben's problem was that he's got a family member that's got a portfolio of properties and wants to retire, sell all the properties off, and I guess just go and live their life, move on to the next chapter, have fun with all that money they've earned. And you know what? They've obviously worked their asses off to build a portfolio of properties, so why not? But the challenge is capital gains tax. And Ben's question is there a way to sell off these properties and minimise or try and optimise the capital gains tax that will be paid? So there's a few options for that, Ben, and I thought I'd describe a few of them for the benefit of everybody, because there are other people that have portfolios of properties that are considering selling them on. So the first thing I would say is, annoyingly, we can't avoid tax. Well, we can, but it's illegal. So we are going to have to account for or forecast for certain amounts of tax. But there might be ways that you can optimize that, maybe save a little bit of tax by being a bit more strategic. And the first thing I would say is it might be worth refinancing those properties to get the cash out and then offering them to a rent-to-rent investor who can then manage your mortgage payments, pay you a little bit of cash flow as well, but also look after all of the management, the maintenance, the compliance. Really just take everything off your hands. And you know, I've done a few deals like that historically where I'll guarantee the rent on that property for a set period of time. I'll take over the management, I'll take over the maintenance. Even if some of those properties need a bit of a refurbishment, I'll take care of that. And the benefit to both sides, number one, the seller or the owner of the property doesn't have to pay the capital gains tax all in one go, because you're actually refinancing 75% of the value of the property. The second thing is that you get your cash out by the refinance, which is positive, and you can use that cash. The third thing is you get a little bit of income every month as well. And lastly, you might be able to build into this a purchase option, meaning you offer that rent-to-rent investor an option to buy those properties at a pre-agreed price at a set time. Now, how does that help? Well, look, your income allowance each year, your capital gains tax allowance, and all of those things are calculated on an annual basis, right? So if you offer that property to a rent-to-rent investor where they take over all of those things, you might be able to strategically sell each one of those properties at certain times that optimize your tax payable. Now, look, I'm not saying you won't have to pay as much tax. I'm saying that you will definitely have to pay tax. But if you can organize that in line with other aspects to your wealth, to your income, to anything else you're selling, when you sell properties and who you sell them to and so on, then you might be able to save a little bit of money on other taxes to cover the cost of the capital gains tax, or you might be able to save a bit of money on the capital gains tax to cover any increased costs in other tax. So I've seen a few suggestions in these types of scenarios where somebody might sell their own personally owned properties to a limited company so that then you can save on certain other taxes. But the problem with that, even if it's your own limited company, the problem with that is if you sell it to your own limited company, then it's still a land registry transaction and you're still going to pay stamp duty tax on it. And so you might end up paying 3% of the purchase price, right? Fine. But you might save, I mean, I'm making numbers up here, but you might spend 3% of the money on stamp duty, but you might save 6% elsewhere in your tax. So for an example, a limited company will get tax relief on mortgage payments, and a limited company will get tax relief on profits. Well, not relief, sorry, get tax benefits on the profits. So you might calculate that by selling those properties to your own limited company, yes, you're going to spend a load of money on stamp duty, but you might get that back in reduced taxes elsewhere. Now that has to be a calculation. You must speak to a tax specialist on that. Look, I'm just a property investor and a letting agent owner, so there might be people that would argue with that. But certainly from what I know and have learned, that there are ways that you can reduce other tax in order to cover other increased taxes, and you might be able to make a saving overall. But what I certainly wouldn't do is sell all of those properties at once, because that will then hit you hard for tax. And that's what we need to do, right? The government have designed our tax system where if you're smart enough and use the right people and you work with the right people, then you can optimize. The government don't put these things in place so that you have to pay all tax all times in every instance. They make it so that certain scenarios will require you to pay certain amounts of tax, and then other scenarios will enable you to offset that tax. It's not a loophole, there's no secrets, there's nothing like that. It's just a way of being a bit smarter with your money. So look, I hope that helps. It's a quick, simple way to try and optimize capital gains tax. Try and do it in line with, or try and be strategic with it. I do think the option there is to refinance and offer it to a rent-to-rent investor, because effectively you're getting the same goal. You are outsourcing everything, so you don't have to have any involvement or responsibility in that property, but you're also getting the cash out of the property too. So I hope that helps. Share this around if you know anybody who's got a portfolio, or if you just tag someone if you know anyone that's got a portfolio that's looking to exit from it. Oh, and by the way, I should probably mention that if you've got a portfolio that you want to exit from, I have a network of portfolio purchasers where they just want to buy portfolios that are ready-made, ready done, tenanted, with a bit of a history of rent payments. So if you've got something like that and you want to exit, hey, give me a shout. We'll book a call in. You can just message me through my Facebook page or email me, tom@pinkstreet.co.uk. And all I'll do is I'll talk through those properties and I'll just let you know whether I think they're potential investments for other investors. And if they are, and you want to sell them all, then I'll put the feelers out to certain investors who are currently active and see if we can connect you guys together. I hope that helps. Speak to you all soon.